James Wilde.
Thank you very much, Madam Deputy Speaker. It was Margaret Thatcher who said that inflation is the biggest destroyer of all, of industry, of jobs, of savings. As ever, she was right. And that's why the Prime Minister put halving inflation as his top priority at the beginning of this year, along with growing the economy. Because if inflation is not squeezed out of the system, then everyone will become poorer. The Bank of England, like central banks across the world, are raising interest rates to combat high inflation. And it's worth noting that rates are actually higher in the United States, in Canada and in New Zealand. But the combination of high inflation and interest rates means people are facing higher mortgage payments, which is causing concern for my constituents. And in North West Norfolk, 24% of homes are owned with a mortgage or loan, compared to a national average of 30%. And I declare an interest as one of them. And those families facing higher monthly payments are having to make difficult choices about their household spending, as indeed are people who are renting. And that's why the government is right to have put in place £94 billion worth of support, a package worth on average £3,500 per household, one of the most comprehensive in Europe. However, it's equally the case that the government should not take action that would add to inflationary pressure. For example, by borrowing an extra £28 billion each and every year, as the opposition are committed to doing. The IFS has said the effects of such action would be to increase inflation and drive interest rates even higher. That's a damaging reality that Labour's plan would have. Instead, along with the cost of living support package, and I welcome today's news that 95% of the disability payments have been made already, we need to take action to ensure that banks and building societies treat people fairly and introduce new protections. So I support the measures in the new mortgage charter. It will help people worried about making their monthly mortgage payments by adding an option to switch temporarily to an interest-only mortgage or to extend the term in order to reduce their monthly payments. And the Chancellor talked about an example where on a £200,000 mortgage that could lead to a saving of £350 a month, which is material. And importantly, people will be able to switch back to their original term within 6 months. And people who are approaching the end of a fixed rate deal will of course be concerned about the rates in the market, and they will have the opportunity to lock into a rate earlier and indeed to then change that at any point up to the new deal taking place. Of course, we've heard about repossessions, and where constituents have fallen behind with mortgage payments, it's incredibly worrying for them to think that they might lose their home. There are already strong protections in place to ensure this is an absolute last resort, but it's right in the current circumstance, I think, to strengthen those protections, and now there'll be a minimum period of 12 months from the first missed payment before any such action could be taken, double the period that the Labour Party has been proposing. And in this House, we should be responsible and offer practical support, and the best advice for anyone worried about meeting their payments is to go and talk to their lender. 2 weeks ago, I was in my local nationwide building society talking to the team there about the cost of living advice that they're giving to my constituents to help them. And I welcome the fact that they're one of the lenders who've signed up to this charter, and I hope that the rest of the market will do so as well. And importantly, to tell customers of these new flexibilities that they have to reduce any concerns that people might have. Curbing inflation is not easy, but it's vital to relieve pressure on family budgets. In his Sunday Times column this weekend, the respected commentator David Smith looked at the prospects for inflation and the need for monthly CPI increases to be smaller than a year earlier. He pointed out that from May to December last year, CPI rose by 4.7%, driven by higher energy costs caused by the illegal war in Ukraine. In the year prior to the pandemic, the increase in the same period was just 0.6%. He noted that a rise of just under 2% in CPI from now until December would deliver an inflation rate of 5% by the end of the year. And I hope he's right, because getting down inflation must be the priority, and the target remains to halve it by the end of the year. That is what businesses and families want. Throughout COVID, the government supported people, and in the face of current higher costs, support for the most vulnerable continues. Now, with these additional measures in the Charter, there will be better protection for people with their mortgages in the face of the higher interest rates. That's the practical action this government is taking. The alternative put forward by the opposition parties of more borrowing and more spending would simply make inflation higher and everyone poorer.